Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too. So for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right. Good morning, guys. Welcome back to another live stream. Thanks for being here. Today we are doing a couple things. Sorry, first of all, I was late a few minutes. I got caught up in some developer stuff and then looked at the clock and it was past time to start the stream. So I apologize for that. We've got a couple things on the docket here. Today we've got the Empire State Manufacturing Index number coming out. That's coming out in just about 9 minutes from now. And we also have the University of Michigan's consumer sentiment, one of personally my favorite indicators in the market or in the economic data that we get. I'll tell you why really quick. The consumer sentiment is forward-looking in a sense. If you asked a number of people, and this is basically what the survey tries to do, if you asked a bunch of people, hey, how are your expenses looking, right? Do you feel like you'll travel? Do you feel like you'll go shopping this summer? Do you think, how do you feel like your spending abilities are good? If you asked them a bunch of questions and they gave you their sentiment and you tracked that over time, it's a really strong indicator that's actually forward looking, right? Think about if you were trying to predict Nike's earnings. If you saw a survey that said people feel like they have some extra money in their pocket, they feel better than they felt a year ago, et cetera. And I'm not saying that that's what they're going to say. I'm just saying if this was the case, right, you might feel a little bit more confident buying Nike shares because you think, well, people are going to have some extra money in their pocket. They might go buy a new pair of shoes, right? This is how we use this sort of information. And I find it very valuable for trying to keep an eye on the consumer, which is a very important component of the economy. Yesterday, guys, we did something fun in the office. We did a soda taste test. Have you guys ever done that before? Let me know in the comments. We did regular Coke, Diet Coke, Coke Zero, Pepsi, and Dr. Pepper. And of the five, you got a little cup of each one, and you had to test it out and see if you could guess the right ones. And yesterday we did that. And if you have been around on the show for a while, you might know this about me already, but I am a soda addict, admittedly, and I got them all right. And I don't know if that's a good thing or a bad thing, but yeah, we had a lot of fun with that yesterday. We also did trivia in the office after work. It was a good time. Anyways, again, we are just about 5 minutes out here from our first data piece of the day. Feel like Diet Coke is easy. Yeah, I think it tastes spicy. I don't know how to explain it, but it's like poppy. It's very, very like carbonated and spicy tasting. I don't know how to explain it. Anyways, so again, indices here about flat here on the day. Yesterday, we saw our first kind of sell-off in the indices. And this is how crazy the indices are right now, guys. They're so bullish. They're so like they've pumped so far so fast that yesterday's move looked like the steepest sell-off we've had in a while. And it wasn't even that big, right? When you actually look at the full picture, the indices, I have said this many times. I'll repeat myself here for a moment for people who are maybe tuning into the stream for the first time in a while or just tuning in for the first time ever. I like the indices to the long side for the most part, but I've been calling for, well, let me back that up. I've been waiting for a pullback in the indices just because I think that we've had a really strong run, and I do see some headwinds in the financial markets that are not necessarily like, oh, this is doomed, we're going to crash 50%. I'm not saying that sort of thing, But I think the NASDAQ and the S&P are due for a bit of a pullback because of the recent round of data that we've gotten out of the United States. In fact, let's do some homework. I mentioned I was doing some work on the EDGEFINDER here before I came on stream. That's why I was late. We've got several projects that are just under maintenance between the internal side. But whenever we do maintenance, the cool thing is when it comes out the other side, it's always a better product. And we are constantly working to improve this tool. Anyways, I wanted to look at the dollar here. So let's get an updated view. And this is part of our maintenance project. Inflation came out, and it came out for the month of February. It came out and it actually ticked higher. So remember that the overall picture for inflation that the Fed wants to see, they want to see inflation continue to come down in the United States. What you've got here, guys, the blue is going to represent the US. You've got olive green and dark green for Europe and the UK. For the currency traders, or just generally speaking, even if you trade indices or gold, looking at these major economies is important. And why don't we throw Japan in there just for fun? Because Japan's kind of a hot topic in FX land. So let's talk a little bit about this. Okay, so, and it doesn't look like we have the latest data from Japan, but let me go through this really quick. So if you look at the major economies here, in fact, this is going to bother me. I need to just slide this out really quick so that we can see the full percentage. There we go. Okay, check this out. So if you look at inflation, and this is the core of like kind of all the drama in the financial markets the last few years is what's inflation doing? Take a look at the UK and Europe and the US. First of all, they all ticked very high in inflation and have been coming down. The issue is that the Fed, to really cut rates, I've made this point many times, but this is a very important one. They want to see inflation hitting 2%, or at least what they've reiterated over and over recently, guys. And let me not miss the news. I got to get back over to the charts in a second. They want to see inflation come down to 2%. We've stagnated at current levels here. We haven't been able to continue that down trend towards 2%. That's keeping the Fed from cutting rates. And the stock market has not reacted to it. It's just basically said, yeah, whatever. They're still going to cut rates. We're going to stay bullish. So in my personal view of the financial markets, I am still bullish because I still think we probably see inflation cool off at some point. We probably do see rate cuts at some point, but I think we're a little overdue for a bit of a pullback. I think that this inflation stubbornness between PPI and CPI that we saw this week, in combination with some cooling jobs numbers, the market didn't really react the way I think it should have. I mean, it doesn't matter what I think it should have, but at the end of the day, for me to buy, I'm looking for a pullback. That's the long story short, actually long story long on the indices here today. So I'm going to switch over to the full market view because we are about 1 minute out, guys, from the Empire State Manufacturing Index, of course, our first number of the day, which could be market moving. So we will pull that up. Gold slipping here in the pre-market session. New York opens up in 1 hour, and in just the next minute or so here, guys, we're going to have the Empire State Manufacturing Index number about 45 seconds out. This will be our first breaking news here of the day. We'll come back in just a second to go ahead and get set up for that. So let's go ahead and roll our breaking news. We'll be a little early today. All right. And we're coming in here, guys, 30 seconds out from the Empire State Manufacturing Index. Does this matter? All news matters if it surprises. Just remember that. All news can be significantly impactful to market charts. You don't know if this is going to be a big mover or not. It could be. We're about 10 seconds out. I don't trade the spike. I don't recommend trading the spike. I very much just wait for what that news is going to tell us to give us some sort of signal. Let's see what we get. Empire State Manufacturing Index should be coming in here. See if we get any major reaction. Nothing too significant here. Gold bouncing slightly. There's the number. Oh, okay. So a miss in Empire State Manufacturing. Little bit of a cool in that number. Let's break that down a little bit further. Let's go through that. So we're expecting -7. Okay, the Empire State manufacturing index, leading indicator of economic health. Businesses react quickly to market conditions. Surveyed manufacturers in New York State. So again, another survey sort of report, and oftentimes these are important factors. We get more of that with the consumer sentiment here in just over an hour and a half, or just under an hour and a half. And so far, a little bit of a reaction, a little bit of cooling. Remember that a slowdown in from the manager's perspective could suggest, hey, the economy might be cooling off, and there's been mixed sentiment about that in terms of how that impacts the stock market. Some people would say, well, that's going to cause rate cuts to come sooner. That's bullish. But I would actually say that we've been seeing a trend towards things like, for example, retail sales yesterday and this number. Cooling economy stuff is not necessarily good for the stock market right now either. This is why I think we're pivoting slowly to more of a bad news is bad news environment. And you might say, wouldn't that always be the case? And the answer is no. Sometimes bad news is good news for stocks because it means that the Fed will say, hey, we're going to need to cut rates. And the stock market will love that. So, but right now, I think the issue is that you're seeing sticky inflation. You don't want the economy to slide while inflation is still sticky. That's where the narrative shifts and you see a sell-off. In my personal view, that's also where I think gold does okay. So I actually think that this cooling number here is not bad for gold. And we saw an initial bounce on gold. Let's go take a closer look at that really quick. Castor says this channel has helped me seriously improve my strategy and methods. I'm up 8,000. Wow, that's awesome this year already. And it's with Nick's advice and knowledge that has helped me to get there. Thanks, Nick and the team. Thank you very much. Hey, you know what? It's on you. I'm just here doing my thing, sharing my thoughts, sharing what I'm doing in the markets. I trade my own money. And if it helps you, I'm very glad. But my purpose, honestly, of my channel is not really rooted in education as much as it may seem like it is. I'm genuinely just doing my thing. I'm trading every day. I'm doing my stuff. And I'm really glad when I hear that people are kind of picking things up from watching, my channel, whether it be my wins, my losses, whatever my experiences are that I showcase in my channel. So that's awesome. So anyways, let's take a quick look at gold. I mentioned this for a second. So we saw gold making some advancement early, kind of, London sessions sort of area, an advance off of this low. Whoops, let me not break my stuff. So we saw a price bounce off of that. Now coming back, I'm actually kind of surprised by that because I thought that number would have perhaps actually given you a little bit more of a bounce factor for gold. Cooling in the economy alongside the sticky inflation this week, to me, is not necessarily a bearish environment for gold. So I'll say this, and I've said it several times. This is the second time we have retested this area of support. I bought on the first one. So I added another trade. I have 2 longs on gold right now. My first long was before the big pump, which I'm, obviously doing well with this one. But I actually added a second trade on this pullback here. At this point, my stop loss is very, very small. My risk on the first trade is tiny, and my risk on the first trade is second trade is very, very small. But my first trade, we're very much in profit. So if we do break this support level today, guys, that's going to trigger me out of the trade, and I will happily take profits and walk on gold and wait for another opportunity. But I'll say this, and I could be wrong, but I think this level will probably hold for now. From the data that I've seen this week, we've seen a trend. Eco readings have been kind of weak, but inflation readings have been pretty stubborn. In that environment, and I absolutely sound like a broken record, and I know that if you've watched my videos and streams, you've already seen me say this 15 times. I've been drilling this over and over on my content because sometimes I am a content creator and I am a trader. If I was only a trader, you know what I would do? If I was only a trader, not a content creator as well, I would say, this is the environment. I stay long gold unless we break this. And then I would go outside and take a walk and I wouldn't look at this stuff until. But I'm also a content creator. And I am very transparent about that. I love making videos. I love making streams. I love making this stuff as helpful and as fun to watch as possible. So I do oftentimes repeat myself. At the end of the day, trading is oftentimes really like straightforward. I've done, this stuff for years. I know my setups. I know my fundamentals. And so when I have this theory, this is my concept. Gold for me is bullish unless we break this structure. If we break this structure, I take profits and I walk. But I am not a full-time trader. I also run a software business. I have a YouTube channel. So I'm just saying, maybe when I'm older and I don't have all these extra things to be doing and I'm only trading, I would set this trade and I would walk away. But I'm too young for that. I'm too young for that. I'm a content creator and meme creator. Yes, but I create some of the memes, but a lot of the memes that show up on my page are thanks to the genius of Chandler. He's the editor behind the scenes. He's like Batman. He put out that meme a little bit ago that had Batman and how like Batman is like this thankless, hero of Gotham kind of thing. That's Chandler on the channel. Although a lot of people now know Chandler because I mention him often. Have you guys heard of Chandler before? Type yes or no. I'm sure many of you who are regulars are like, oh yeah, Chandler, James, Frank, you guys know the cast behind the scenes. Bro, you're doing great work. Thank you. Appreciate you. Yeah, Chandler is the meme master. Started watching at 200 subs. Did you really? We're at 400,000 something. I don't know why so many people, here's my way of coping with the fact that I have 400,000 plus subscribers and my videos, ready? My videos get like 5 to 10K views. That's a pretty bad ratio. You guys want to hear my cope for that? Here's my cope for this, okay? My cope for this, as in like how do I make myself feel better about this? Well, my content is pretty fundamentals heavy, which I think is not always approachable to a lot of people. A lot of people are like put off by fundamentals, and I accept that. So maybe that's part of the reason. I don't show any Lambos. I don't show any, the really exciting trader lifestyle stuff. I don't do a whole lot of that. So maybe that's a little bit of cope. But the other side of cope is that, unfortunately, guys, my channel's been up since 2018. So many people have come and gone. And that's kind of a sad reality of my, so many people have come to my channel, subscribed, they quit trading, and so they don't watch my videos anymore. Or here's maybe the realistic thing. Maybe I'm just more boring than I think. That could be the third option. It's 1, 2, or 3. Either, again, it's a transitory crowd. People come and they go when it comes to that. Or maybe my videos are just not as exciting as I should make them. I don't know. But to be honest, I'm probably not going to change them because I'm in a rhythm here. I've got my strategies. I've got my concepts that I day in, day out trade with. And for me, that's all I need to do. All right. NASDAQ is tried to poke higher, pulled back. Gold, like I mentioned, I will stop out, take full profits on my positions if we hit this trailing stop. It's not actually a trailing stop order. It is a stop that I have trailed. It's not automatic, but I've moved this stop here just below market structure. If that breaks, I'm out of my trade and I will take that for the week. S&P, NASDAQ, I'd be interested to see if we can get some sell-off today. If we do sell off, if we get, a similar reaction to the data that we saw yesterday, where we saw a bit of selling in the indices, personally, I will probably be looking to sell some puts on a couple different ETFs that I like. So if you guys are in the VIP room, I will probably be selling some puts if we get kind of a sell-off. And how would I justify a sell-off? Well, I'd like to see a spike in the VIX. If you get a spike in the VIX, I'll probably look to sell some puts. So yeah, something to consider. Let's take a look at some stuff here also. In terms of top setups here, let's take a look at where we are at. how did gold go from 8 to 0 very quickly? I think it was at 5 for a little bit, and it dropped here recently. Let's dive into that for a second. Gold inflation was rising. It didn't. So this week's inflation data kind of took away some of the picture for gold, and I'll explain that. So part of the reason, when we look at the EDGEFINDER for gold, inflation this week, right? Inflation ticked up. And when inflation ticks up for gold, that is actually a bearish thing. Now, why is it a 0 score? Well, it's ticking up, but it's also relatively high overall. I know this is kind of advanced, kind of confusing. In fact, if you want to talk about the most confusing component of the entire EDGEFINDER algorithm, it's inflation. Inflation is the most difficult component to understand within the EDGEFINDER. If you understand the EDGEFINDER's scoring of inflation, then you understand a lot, because it's really complicated. Basically, the idea here is that we look at inflation and how it's changing over time. So let's look at inflation for a second. So inflation in the US ticked higher, okay? Is that bullish or bearish for the dollar? It's bullish for the dollar. And so because that's bullish for the dollar, ticking higher inflation, that puts a negative score towards the price of gold on the EDGEFINDER, the output of gold. But gold also typically does well in a higher inflation environment. So that kind of negates the score. That's why we got -1, because inflation ticked higher. Okay, that's bullish for the dollar, that's bearish for gold. It's -1. But then we're in a higher inflation general environment, so it kind of knocks that out and we get a +1. That's how the EDGEFINDER scores it. That's an oversimplified way. But basically, the EDGEFINDER says, well, we're relatively high in inflation, so that's kind of bullish for gold, right? Generally speaking, a higher inflation environment for gold has historically been pretty good. We could get more into that. It's dependent on what the Fed is currently doing as well. But a tick higher in inflation is not necessarily great for gold. It's kind of a confusing topic. In fact, it's a really confusing topic. Inflation, like I said, is the hardest thing to understand on the price of gold in the EDGEFINDER. But inflation ticking up this week was not necessarily good for gold. We saw a bit of a reaction to that, right? We saw some give back on gold. Now, that's not the full picture, though, right? Why do I say that? Why is that not the full picture? Why isn't gold, if inflation was really bearish for gold this week, why don't we see a big drop off? Well, because other readings here were not so promising for the economy of the US. So we look at PMIs, we look at GDP numbers, we look at retail sales. Retail sales, PMIs, GDP numbers, all of them have disappointed recently. So that, once factored in, will actually be a more positive thing for gold. So that we're working all the way, by the way, on some of those things. We have several maintenance projects that we're fixing. Retail sales is one of them. But once those are fixed, the score will probably adjust. We've neutraled it out in the meantime, but continue to watch for some setups there. The Australian dollar is getting a bearish read. That's kind of a new appearance. Let's take a look at that. Australian dollar, which has been selling off recently. We've seen some selling in let's update our chart here. I haven't even looked at this currency pair in 16 years. And here's the Australian dollar, came up, retested 66.25, let's call it, and started to give back some of those gains. Again, it's getting a bearish read on the EDGEFINDER, kind of favoring, if you are a dollar bull, perhaps this would be the area. That's the only dollar cross that is getting a bullish or bearish read. So kind of interesting to see that. The DAX is still very bullish, Euro Kiwi, Pound Kiwi. I know one of our regular super fans of the EDGEFINDER, Dan Emerson, I think he said he was long Euro Kiwi. Yeah, long Euro Kiwi, Pound Kiwi as well. Basically, the EDGEFINDER's been pretty bearish on the Kiwi dollar specifically, which has turned out to be a really interesting call out. So I've been watching this. If you are watching these pairs, if you're an EDGEFINDER user, and you trade currencies, Euro Kiwi, Pound Kiwi, both of them are doing something interesting. They're both right up, pressed up against key resistance. Should be an interesting one to see if we can get that breakout next week. If that breaks out, that could be an interesting story. That's Pound New Zealand. Let's look at Euro New Zealand as well. Again, a similar concept here. You are right up against resistance. If you get that breakout next week, that could be a nice trend continuation play. And again, you kind of have that edge finder confirmation when crossing data between the two countries. So, well, Europe, not a country, but the euro versus the Kiwi, the pound versus the Kiwi. Really interesting. So we'll keep an eye on that one for sure. We'll probably come back to that next week, see if we can break out through there, because that breakout retest does look pretty clean. So yeah. Also, guys, real quick, if you would like a copy of the Edge Finder to try out, we do have 30 days access available. If that's something you're interested in taking advantage of, we'll drop a link here in the chat. While we're hanging out here, you can fill out this application form to apply for 30 days access to the Edge Finder. So all you have to do, fill out this application form, and just let us know where you found the A1 trading, where you heard of the Edge Finder, just a couple of questions that we ask you, and then we'll send you some information about 30 days access to the Edge Finder. So if you've been watching for a while and you're like, yeah, let me test this thing out, let me try this thing out, take advantage. Click that link, fill out the form, and someone from my team will get back to you briefly. In fact, they just got into the office, so you'll probably hear from them very soon. So there you go. We're now going to take a quick break. We're going to thank our sponsor. We're going to come back and talk to Kenzo for Fundamental Fridays, one of my favorite segments of the week. We're going to chat a little fundamentals with Kenzo, who's a regular stream contributor, has his own YouTube channel, all that good stuff. We'll hear from him in just a second. So coming in right after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we're back with Kenzo. Hey, Kenzo, how's it going, man?
I'm doing great. Thanks, and you, man?
I'm doing good. Good to have you back on the show. Kenzo, since the last time we've spoken, it's been a lot of market data. We had jobs numbers, we had CPI, PPI, Producer Price Index, Empire State Manufacturing here this morning. What are you feeling like with all this data behind us? It's always nice. I like this period of time where we have a lot of numbers and data that we can kind of get a read on the economy, get a read on financial markets. Of course, we talk a lot about U.S. data, and I know you trade, U.S. indices, you trade gold, you trade currencies. What are your reactions to what we've been seeing recently to all those numbers?
Yeah, it's very entertaining because this week we had some very mixed numbers. Retail sales were a little bit lower, which was very great, but PPI, it went up, man. So that can be a problem, especially about rates cuts. But PPI is not really that aggressive that much. I like the fact that retail sales, at least they went a little bit lower. Sure. But the overall structure, to me, it's fine. I mean, the market has been just moving in the same direction. It was good for actually a nice reversal. I think the dollar will eventually maybe try to go lower again. I think that PPI, they actually cancel each other with that retail sales, you see. So the thing is, now we are actually confused if maybe they're going to postpone about cutting the rates, or maybe they will just cut the rates, or maybe they'll just wait. And if they wait, that might be a little bit bad because it means the rates, they will be higher for quite long.
Yeah, and you know, at the turn of the year, the market got really excited. I'm talking about, of course, the stock market, right? The equity market went crazy towards the end of the year because the idea was that the Fed was likely to cut. They even mentioned they forecasted at the beginning of the year that they would see 3 rate cuts as appropriate. Well, here comes, you know, we're on the cusp of turn into April here, and we have not seen one. And expectations for rate cuts have gradually been pushed back. At one point at the turn of the year, people thought it was going to be March. Here's March. We're not going to see one most likely. You know, so that change in narrative, what I find really personally to be a bit concerning about, Kenzo, is that in the turn of the year, we thought interest rate cuts were going to kind of come in March. That was what the market was really hopeful for. But we just went flying high on that idea. But since then, the idea for
Yes.
rate cuts has been pushed out. And yet the market has continued to push higher and higher and higher. So what has me a little bit concerned is this week, the data was not great. You had inflation hot.
Mm,
As you mentioned, retail sales was a disappointing figure.
mm,
And so you have this whole picture where the economy is showing signs of potentially slowing down. At the same time, inflation is still problematic. To me, that would constitute looking for more of a pullback on the indices. And while I am longer term bullish on the indices, that's my opinion. I think they're due for a bit of a pullback. Would you agree, or do you think that there's still more upside in the meantime for things like Nasdaq, S&P, Dow? And I should also mention I'm not interested in shorting them. I'm just saying that I think that the
mm.
pullback before a buy is more interesting to me.
Yeah, you see, on this one, it's quite difficult. It's quite difficult. But on my side, I will
Mhm.
just say I'm looking for some bullish moves. You know what I'm expecting? And next week, we're going to have those interest rates. I think they will maybe, let's say, they will just pause the rates. But I think the interviews, the later in 30 minutes, I think they're going to be positive
Hmm.
because we're expecting them to cut now. If they don't really cut now, obviously we'll have a better understanding what will happen. Obviously, the next session of Fed, I think maybe the news will be agreeing with them to cut. But now I think it's very, very early. And you know, mostly people they don't really care whether if they cut or they just leave the rates like that. But their statements is very powerful because now we'll understand, oh, if they're going to cut, or maybe it's obvious that they're gonna cut maybe in June or whatever, then it means where we are now, it might be the lowest level. So most likely people are going to buy some shares or they will just continue buying. And on the other side of Nasdaq's S&P 500, I think we are at the lowest level. If maybe we will be talking about AI, I think that is the start of AI. Yes, somewhere somehow the market will be overbought, but if we can look it nicely, we can see that we are still at the early stages. So I think we're gonna see some bullish. But yes, along the way we might see some reversal. But on my side, I feel like we are still maybe going to see some reversals, especially today when the market opens. I think maybe we will see the market trying to reverse.
Yeah, and Kenzo, where I definitely agree with you overall is I think it's hard to deny the early stages of a bigger push in the direction of AI. And what will be interesting too about that conversation is like where, you know, right now chips are like the easy play, right? People are like go into semiconductors because wherever the AI revolution goes, chips are probably going to be needed. At the same time, the question is, what's going
Exactly.
to be the next big company that can actually really seriously monetize AI? That's where things get interesting. Regardless, I think that that trend will continue in things like the Nasdaq and tech-heavy areas of the market. And in a really good scenario, it will actually trickle to other areas of the market as well, where other you know, not tech-specific companies can still benefit dramatically from AI. That would be, you know, a very bullish overall picture. So while I am still very much bullish on the indices, and that's where I'm most comfortable, you know, kind of staking my claim, my point is more so just that I think that the market is getting a little bit excited right now. It's a little bit overly optimistic in terms of, you know, the idea of AI is, of course, a real thing and a very powerful thing, but is it enough to completely squash the importance of the economic data that's been coming out that's kind of pointed towards
Mm,
cuts are not coming as soon or as people, well, they might come. This is the other thing. They're not coming as soon because inflation's coming down. They might start having to come
mm,
sooner because the economy is slowing down. And that is a much less, in my opinion, it's a much less bullish environment for stocks. If the stock market or if the Fed is cutting rates because the economy is starting to show signs of not like recession or anything, but slowing, that is a little bit less attractive than, oh, inflation is cooling, but the economy is still chugging along, right? It's a very
mm,
interesting kind of scenario there. Why is that potentially bearish for stocks? Well, in my view, part of the reason is because if the economy is slowing, that could equate to slowing in earnings for companies. And so I think that that is partially my concern with the indices, especially after a straight shot to the upside. So for some time. Again, I'm saying from my perspective that I would like to be long the indices. I've just got to see a pullback first.
yes.
And for me, I have nothing against trading this for as long as you can. Like you might be totally right. We might see like this short term like push again for the Nasdaq in the meantime. But for me personally, just from a longer term perspective, I am waiting to see if we can get a bit of a pullback before I start getting bullish again. So again, kind of I think it's important, whatever your trading strategy is, and for listeners the same thing goes, to have a plan to know, you know, if you're right, Kenzo, and we make a push off this level, we continue in the meantime, I'm sure you have, and I know you have a plan in place. And if it
Mm,
doesn't, if we start to roll over, you have a plan in that case as well to keep yourself protected, right?
yes, yes. So yeah, you see, I think maybe this week we already it's done. So it means the main focus is gonna be actually next week. So which means we're gonna have a clear picture of what will actually happen. So after the conference,
Hmm.
that will be the bigger thing. Obviously, I also think that they're not gonna cut the rates. Not everything's actually so much stuff is not really going good on the economic side, even though we have some good stuff that can actually push the market up, like AI. But at the same time, the economy is not performing very well. So that just cancels each other. And also the rates, if the rates are higher, people they are afraid to invest when the rates are higher because the profits won't be that much. You see.
Hmm.
So
Yeah.
now I think the best way for us to say we're gonna continue, it's only to hear from them that okay, this time we're gonna pause with the rates, but we sure that maybe next time we're gonna cut the rate. That will be good, even though the rates will stay the same. I think from there it's where maybe I can look for a nice buy. But it's possible also because we can be wrong. If things don't go the way we want, I think maybe we're gonna see the market breaking out. And if it breaks out, I think it's gonna be a very long-term sell until we hear some positive news.
Hmm. Yeah, and again, we'll have to see how that plays out. Today is a big day to Kenzo. I'm not super familiar, but I believe that the third Friday of each month is the options expiration day, and it is. I don't know enough to really give a full breakdown on why that is important, but I do know that historically, the third Friday of each month, there's a lot of expirations for options, and the day can inherently be very
Yes.
volatile because of that. So today might be a decision day in terms of, as you mentioned, that level that we've got both drawn up on the NASDAQ here. Will this level of support
Yes.
hold as strongly as it did yesterday, right? It bounced very hard off of that level intraday. Is it going to kind of make that move? Or with all this volatility, is that going to be the breaking point in the short term for a possible pullback lower? We'll have to see. And again, I do think we could see more volatility today than people are expecting. But again, we'll have to keep an eye on that. Kenzo, I also want to ask you, we've talked a lot about the indices. What do you think about gold? Do you think gold continues higher, or do you think it's due for a bigger pullback?
On my side, with my small research, I think we can still push to the upside. So beside, maybe let's say beside US, remember we have China, we have other countries which they also not performing very well. So, and China, if you still remember, is the second biggest economy, and their economy is not performing very well. Their stock exchange is not also doing good. So for them to hedge their risk, they have to do something. They have to buy gold, maybe also Bitcoin. And as the rates in the US are very higher, so it means they have to just buy gold. And I think, I think we will still see some very nice push to the upside. Plus, we have some smaller geopolitical news here and there, so that will fuel these prices to go even higher.
Yeah, that's a good point too about the geopolitics. You've got both sides there playing, and I like that you brought up China, because not a lot of people are thinking about that. But yes, there is and also, that goes over to, as you mentioned briefly, Bitcoin. The idea that a lot of people in China are not very confident in their own stock market. I mean, it's trading around 2007 levels right now, right? This Chinese stock market has been really beaten down. So people have kind of lost faith. Yeah. And there's a little bit of a, move into gold, a little bit of Bitcoin in that regard as well. For me, I have the same level drawn that you do in terms of this level of support around 21.55 for gold. For me personally, I am in longs, and if we do break this, that's going to trigger for me like, okay, time to get out of the picture for the time being. But as long as we hold this level, I will say, I mentioned this earlier in the stream, Kenzo, we've held this level really well. One time, this was the second time, and we've briefly retested that zone here this morning. I'll be very curious to see if gold is able to hold that line of support here today, or if potential volatility brings us and breaks us underneath. So kind of some decision points for both gold and the NASDAQ today.
Yes, but for me on gold, I think it's quite straightforward. If you check the market, maybe on other pairs, let's say dollar index, here, you can see an aggressive reversal here. But when we check gold, there was nothing like that. There was nothing, any effect on gold, only a smaller move. So that shows that there are still people who are holding gold like aggressively so which means now, just because the market actually reversed a little bit, I think we are going to still see a very nice push. Yes, it's possible for the market to go a little bit lower, but currently, I don't think there's anything that you can invest in and have full confidence besides gold. Anything's not really working very well. So I think gold is the number one choice. The second one maybe might be Bitcoin, and the other ones maybe it will be just to, I don't know, but something else. But for now, gold
it is kind of offering that as a safe haven, if you will, especially with uncertainty. I think part of the recent, maybe a little bit of slowdown in the U.S. While inflation is still a stubborn problem, that picture, of course, has been very bullish for gold. That combination, I've talked about that a lot, is cooling jobs, cooling economy, plus stubborn inflation. That's the idea of like potentially a stagflation type environment. And I don't necessarily think that's where we're headed, but I think at least the increased probability that could happen is really a bullish sort of picture for gold. And it seems like it's also translating well to Bitcoin. Maybe not today is the best example because Bitcoin's down 4.5%, but recently the rally has come alongside gold. So been really interesting to watch these markets. And so we'll be interested to see if that correlation continues to stay strong between the two of them. Kenzo, I want to thank you for coming on the show here today, and mention to everybody in the audience, if you do not already follow Kenzo on his YouTube channel, here it is. Make sure to go subscribe to Kenzo on YouTube. It's Extra Hot Forex. If you're watching this back at a later time, just search that up on YouTube. Make sure to go subscribe to him, show him some support. Kenzo, I very much appreciate you coming on today, and thanks for walking through a couple charts with us.
Thank you very much, and your viewers. I'll see
All
you
right.
next week.
Yeah, see you next week, Kenzo. Again, guys, make sure to go show him some support. Kenzo, we'll see you next time. All right, yeah, and always good, again, guys, to have Kenzo on the show. He's very, very knowledgeable on the fundamentals side, which I really like chatting with him. Let's just double back here and take a quick look. S&P 500 kind of flat on the day. NASDAQ slightly in the red. Dow slightly in the green. You got the Russell bouncing back a little bit. Yesterday was kind of carnage for the Russell. We saw a big sell-off here. And I think that this is actually interesting. Take a look at this 4-hour chart here with me on the Russell. Russell, of course, is a lot of small cap companies in the United States. We saw this upward trend line kind of fall apart yesterday. Off of PPI, right? Basically, inflation numbers were enough to roll this market over. This is a more sensitive area in the market to interest rates. I couldn't find fall apart yet. Sorry about that. My watch wanted to chime in. And you know, with yields jumping here recently, this is pushing back a little bit on some more sensitive areas in the market. This jump in yields, as Kenzo mentioned, coincides with a little bit of a boost in the dollar here. Despite that boost in the dollar, though, why isn't gold trading much lower? Well, it's because of some of the other reasons that we've talked about fundamentally in today's show. If you're asking why hasn't gold broken support even though the dollar is strong, then welcome to Fundamentals Boot Camp. It's because the economy is also showing signs of slowing. People are a little bit concerned about that, and so they go into gold. So it's propping the price of gold up. That's why gold's not dropping off big time. And if you understand fundamentals, that actually makes a lot of sense, why the dollar and gold can both sort of trend up at the same time. It's because risk off is a real thing, a little bit of concern about the economy. Let's go into gold. Let's go into, you know, the dollar as that safe haven relative to other currencies, etc. So anyways, I think it could be an interesting thing to watch. Also, the euro dollar pulling back to support should be interesting there. Also, I have a question for Chandler. Do we have Chris coming on today? Has he already been scheduled? If not, then I'll probably call stream. But if he is, I'll stick around until he gets on. So I'll just look for a message from Chandler. He's the real stream master. I just come on here and chat markets. Chandler does all the genius pulling of the strings. But anyways, yeah, it's a weird one, right? The idea that the dollar can go up at the same time as gold is oftentimes confusing to newer viewers. Didn't ask him today. See if he wants to. Chandler, I wouldn't worry about it. It's a little too close. That's perfectly fine. We'll have him on for next week for sure. And with that said, guys, I think that's going to wrap up the stream. Let me also do something real quick. If you guys aren't already in our Discord channel, let's do some free stuff today. Join the Discord channel. If you have not already, we'll drop a link here in the chat. It's Friday. Let's give something away. I got to think about, you know what we're going to give away today? Join the link, and I'll tell you. Join the link here. If you're not in our Discord, we put out a ton of free value. Between Frank and myself and Julie, we keep up tons of good stuff in the group to keep people informed. So if you're watching with me here live, join the Discord channel. I'm going to drop you guys a free something. Okay. If today we have COT data dropping. If you want free COT data, send a message to @Emily with the words free COT. Okay, so we're going to give something away today. There you go. Join up, my friends. Again, join the Discord. Click that link. When you're in there, go to the new members section and then click Emily's name, type free OC, COT, and she'll send you some information about that. The Commitment of Traders data comes out today. It is Friday. We get it every Friday. Friday comes out. We get the latest round of data. And it is a very, very cool indicator that shows us week to week what institutional money is buying and selling. So we get that data later today. Join the Discord, send a DM to Emily, let her know that you would like some of that free good old COT data when it drops. We'll get you set up. You can't message her? Why can't you message her? If you can't message her, if you cannot message her, I could drop her Telegram. Here's her Telegram. Emily_A1 trading. Is that right? Hold on. Let me do this. Okay, I got it. All right, guys. If you can't message her on Discord for whatever reason, or you don't have it, here's her Telegram. I just dropped it in the chat. Just send her the DM, free COT. She'll get you hooked up. Okay. There you go, guys. If you don't have Discord and you have Telegram and that's easier for you, just click this link here. It'll open up Telegram. You can send her a direct message there. And there you go. She'll get back to you guys soon. She's about to get flooded with a bunch of DMs, and God bless her. Anyways, guys, that's going to wrap up the stream. Thanks for hanging out. Hope you got something out of it. Consumer sentiment coming out very shortly in 50 minutes. I'll probably react to that in the Discord if you're in the Discord. So stick around. Thanks, guys, very much for tuning in. See you guys next time. Have a great weekend ahead.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.